So you want to get into real estate investments, huh? So, and you watched a couple of videos on the BRRRR method, and you want to kind of know more in detail of exactly the people involved in the BRRRR method to go ahead and get you into a successful track into the real estate investment side. Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. Those two guys right there. Now, we mainly deal only in California as far as the real estate purchasing and refinancing side of it. Of course, we are licensed in a couple of other states, but if you do need any real estate assistant, link in the description below, or if any of this content helped you, hit that like, subscribe, comment. Whether you hate it or you like this video, I don't care. Just put whatever. But the people involved in the BRRRR method, number one, is the most important guy out there. And I'm not saying that because I'm the most important guy and I'm that money guy. It's because you need to know where your funds are coming from for your first initial property. And then as you go along, this is the person that's going to keep funding and finding you the deals that are coming up. Now, I can't even explain to you how many times I get a call from people that are in these distressed properties. These distressed properties where they're just like, I cannot make my mortgage payments. I need to get out of this. This is not happening. My house is complete shambles. And the worst part about it is when we get phone calls from people who are, they're renting out their properties. Now, for instance, I just had a person that was renting out their property, and because of this whole COVID and emergency or this eviction moratorium or whatever it is where you were not allowed to evict, people just annihilated these people's property. And then also, if you haven't noticed, a lot of people who rent out their properties, which I'll go ahead and put a little, do I put it side by side? But people have been using other people's rentals for grow houses. Marijuana industry has become very, very big. Apparently, it's become very lucrative, and a lot of people are renting out their homes, and these people are just using these as grow houses. Now, we had a couple of those. Now, the reason why I give these examples is because this is when distressed properties come in, and then where you, as an investor, or anybody who's trying to go ahead and say, you know what, this is something I could fix up and I could go ahead and turn this around and do my own thing, and I could do a better job at managing this property than the other person did. Now, this is just all, whatever you decide. The people have come to me and said, hey, I need to get out of this house. This is just really, really bad. Do you have any buyers lined up to go ahead and get me out of this? It's just, it's unreal, especially now since this whole eviction moratorium has ended, and people are just losing their mind. So number one is you got to find yourself a money guy, a mortgage broker or a lender that you feel very, very comfortable with. Now, as I go along, please notice a common theme here is you need to feel comfortable with every single person that you are doing business with. Now, for me personally, I don't want a wham bam, thank you ma'am, one deal and we're done and I'm just going to charge you an arm and a leg or whatever it is. First of all, I can't even do that because it's illegal. You can't charge whatever it is your little heart desires. You charge what the investors are able to, and then we have certain quality standards that we have within our company to go ahead and fall under, to make sure our insurance is good. So, but is you find yourself at a money guy. A money guy is going to go ahead and get you into that first property. They're going to find you the money. They're going to tell you, hey, this is what we're going to need. This is how we're going to go ahead and do it. This is when we could go ahead and refinance it because you're going to need to buy. And then your mortgage broker friend or your real estate agent friend, mainly your mortgage broker friend, will go ahead and get you the money. Then B, your real estate agent friend. If you do have a real estate agent in your state, I'm not sure exactly how your state works. Typically, mortgage companies, they'll have both sides. They'll have the mortgage side and they'll have the real estate side to find you those deals. Now, it's important to just not have one. Have 10 agents if you want 10 agents, and anybody who's willing to go ahead and send you a bunch of deals, because we have something in the real estate world that's called pocket listings. Pocket listings are things that people don't want on the market, and they just don't want people to see it. They don't want to put on MLS for whatever reason whatsoever. Now, we get those all the time. Hey, Omar, I got this property. Do you have anybody lined up that wants to go ahead and see if they could go ahead and get into this? Now, once you found your money guy, then the next one is going to be you need to find a lawyer. You need to find a lawyer. Lawyers are very, 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 very important because you want to go ahead and make sure that your capital is safeguarded and you don't get into a contractor dispute, because that is going to go to my third point, is going to be finding yourself a good contractor. A contractor and a lawyer that'll give you a good timeline. Now, what is a timeline? A timeline is going to be exactly what it says, okay? It's going to be, I need to have, as soon as we close, the contractor comes in and week one, they will have this much done. If they don't have that much done, then they will go ahead and they don't get paid. Once they're completed with the tasks that are due for week one, then what are the tasks for week two that they need to get done? What are the tasks for them to get for week 3 done? So this goes on and on until we have a completion date. There are a few contingencies that you might put in your contract. Now, of course, this is when a real estate lawyer will come into play, where they're going to go ahead and put a contract in place for you that is going to go ahead and coincide with whatever the contractor is saying, whatever you guys agree upon, and then you could go ahead and go from there. And this way, you are very well protected when, let's say, things happen. And I know every single one of you that are watching this video, or if you haven't heard of it, horror stories about contractors dipping out on, like, midway through a project, or they're just leaving them high and dry, or they take a bunch of initial investment capital and then they just do whatever it is that they want to do, and it just becomes a big nightmare. And now, you're going to lose the property, you're going to go ahead and lose your initial capital investment. Now you're like, oh, I got to go pay for a lawyer now. No. Do it just the way that I'm telling you, and I promise you life will be so much easier. So now, once you find out that how much you could get, B, you find yourself a lawyer that's going to put a contract between you, the company, the property, and the contractor that's doing all the work for you. Now, there are going to be some things in a contract that you have to realize. This is going to be a side. I am not a lawyer. I'm not going to tell you. I don't have Esquire at the end of my name. But me doing this a bunch of times, I will go ahead and let you know that you have to go ahead and anticipate that there are going to be some contingencies inside of your contract, because there are things outside of a contractor that could do just what's called a base inspection, an initial inspection. There could be some dry rot that might come up that would have to go ahead and be accounted for. So that's why it is good to have this type of relationship with your lawyer, your contractor, your money guy, and you don't overextend yourself, because you might need additional money to go ahead and get that property into the next step, which is going to be your rental part. Now, the rental part, we do property management too, but it's not a thing that we like to go after. I recommend that you go to a property management company that strictly deals with property management. You might say, hey, I don't want to pay the 6, 8, or 10% or whatever it is that they're charging. Then don't do it yourself. But this is where it comes back to having a good lawyer on your hand that's going to go ahead and make sure that you're protected. And in case something happens and you have to go through eviction, you have somebody in your corner to go ahead and help you out. Then, once you have yourself a property management company, you have yourself your lawyer, you have yourself your contractor, you have yourself a money guy. Oh my God, what's going on with my nose? Then you're completely dialed in. So now we covered the buy. Now we have to go ahead and find you the property. Now we're finding the property. That's going to be the $1 million deal right there. That's going to be the one that's going to go ahead and get your feet wet, and you're going to go ahead and consult with your mortgage broker, with your real estate agents, with any money guy that you might have or you feel comfortable with dealing with, to go ahead and get to what's called an ARV, which is your after repair value. So hypothetically speaking, on the buy side, you bought a house initial for $300,000. Your initial capital investment that you have, let's say hypothetically, it's 20%. So you're in it at $240,000 principal that you owe on the property. Your ARV, anticipating that it is like kind of a beat up home, because that's what you're looking for, right? You're looking for a beat up home. You're looking at, let's say, $400,000 hypothetically, right? So that means that you're able to push out $320,000 back out. $300,000 back out. And then you have your rental that you have coming in. So you'd say, you know, you're at $320,000, 80% loan to value. So you could pull out your initial investment, which is at $60,000, plus an extra $20,000. That's going to be your cushion, and you're back to square one. And then what we have is you have your buy, you have your repair. You're going to go ahead and rent. Now you're refinancing to get your initial capital investment out. And then the last R of the whole entire equation is going to be the repeat part of it. Then you're back out there because you already have this one covered. You got your initial capital back, and now you're going on to the next one. So can you do this for $0? No, you can't. I mean, eventually it'll end up costing you nothing. You'll be in the green, and their mortgage payment or their rent payments are going to pay for the mortgage, the principal and interest, tax and insurance. You already pulled out. You're good to go. You're trying to go buy another one. You're going to keep killing it and doing really, really big things. Now, most of us mortgage brokers, we have about 5 to 10, 15, 20, whatever it is that you have, investors with thousands of agents on deck to help you find your next deal, because that's what we're looking for. We're looking for people that need to get into it. So yeah, that is the people involved in the BRRRR method. And if you do need a mortgage broker friend, link in the description below. I will be more than happy to help you with any one of your finances and your next property deal or whatever it is that you want to go ahead and get help with. We do offer up to 50% commission rebate, which will help you out a lot getting your house staged or painted or flooring or whatever it is that you're going to do. And this is post-closing. And we have a ton of mortgage products available, especially for investors. So if you like this content, link in the description below. If you hated it, you could dislike it. That's cool too. Anything that you want to put. But we really appreciate you watching the video. Until next video, guys. Thank you.